This is your Greater Vancouver Housing Report. We're taking a look at the final sales numbers reported for March 2022. Now, last month I spoke about the early signs of the housing market beginning to turn. Fewer offers, less fear of missing out, and so on. Again, none of this should have come as a surprise. We've had 2 years of record home sales and runaway price growth. And trees, they don't grow to the sky. There has always been ups and downs to a housing market, and this time is no different. The downs are coming, even if that just means a slowdown. So when I spoke on last month's numbers, the Canada 5-year bond was yielding 1.5%, and today it's yielding just over 2.5%. In just 1 month, the most important metric in Canada housing moved 100 basis points. In case you need a reminder, the Canada 5-year bond prices our 5-year fixed rate mortgage. So when yields rise on the 5-year bond, so too do the borrowing costs for a fixed rate mortgages. In other words, over the past 4 to 5 weeks, we have seen the typical 5-year mortgage go from 2.8% to 4%. Now, we haven't seen 4% mortgages in nearly a decade. Now, I know the media likes to talk about foreign buyers and investors and taxes and housing supply, but at the end of the day, the largest influence on the Vancouver housing market is the cost of borrowing. So let's run some very basic numbers here on borrowing costs. At the onset of the pandemic, the benchmark price of a home, now this is all property types combined, not just houses, it's all property types combined. For Greater Vancouver, that was $1,030,700. The 5-year fixed rate mortgage was at 1.5% at that time. And assuming 20% down and a 25-year amortization, your monthly mortgage payment was $3,296. Fast forward today, and prices are up big time. The benchmark price sits at $1,360,500 and mortgage rates are at 4%. A new purchaser would be looking at a monthly mortgage of $5,725. In other words, once you factor in today's prices and mortgage rates, the typical buyer is paying an extra $2,429 a month. That's a 74% increase in their payments. And even if we're taking a more conservative look and only going back 6 weeks, mortgage rates were 3%. Based on today's prices, that meant a payment of $5,150 compared to today's payment of $5,725. That's a $575 difference per month. It's not insignificant, especially when you start tacking on rising fuel prices and rising food prices. So we shouldn't be surprised to see the housing activity slow. The only question now is, where will mortgage rates be in 12 months? This uncertainty is giving home buyers pause. Home buyers are now asking the question of, should I rush a purchase to secure an expiring rate hold, or wait and hope prices fall enough to offset new higher mortgage rates? Ultimately, the Bank of Canada rate hike expectations continue to rise. And with many of the major bank economists forecasting 6 to 8 more rate hikes this year, I still think these are on the optimistic side, as I don't believe the housing market can absorb this kind of increases without a material decline in prices. So the question is ultimately whether the central banks are willing to sacrifice the housing market in order to squash inflation. My gut tells me that they'll act tough until things start to go south, or until they do go south, at which point we'll be talking more about financial stability and not talking about inflation. So this will not be a fun ride, but I'm afraid there is no getting off the roller coaster. The train it's already left the station. So now let's talk about the detached housing market. We're seeing calmer bidding wars, but it's still a seller's market. As we talked about earlier, the demand is slowing, particularly for detached houses, with sales down 34% year over year in March, albeit that's off elevated levels from last year. So the problem here, new listings remain at extremely low levels, and this is keeping prices firm. New listings for detached houses are down, they fell a whopping 30% from last year in March. And so this is also keeping the months of inventory for sale at just 2.4%. Balanced market conditions require inventory to get above 4%. So we're still pretty far from that. This is why the prices remain firm. Inventory is simply too low, and we'll need time to build back to a healthier level. So yes, bidding wars are less intense because buyers are no longer in that sense of panic. The narrative is shifting from, I have to get in this month, to, well, maybe I'll take my time and I'll find a better house next month. So instead of 8 offers on a house, we're seeing maybe 2 to 3 offers. Still competitive, but buyers aren't driving prices to the insane levels anymore. So if you're looking to buy a detached house in the next couple of months, don't expect to see much relief on the sticker price. Inventory conditions still favor the seller, although I suspect that will probably change later this year. Next, let's talk about the condo market. It's still on pace to outperform the other categories this year. Anyone who's been following these videos for the past year knows that I have been bullish on the condo market. As we have seen in most housing cycles here, detached house prices lead the market higher and condo prices eventually follow. There are 2 reasons for this. Home buyers get priced out of everything else, and investors, they see those prices rising across the market and they decide to jump in. The sales to actives ratio in the condo market is now 72%, and it hasn't been this high since the 2017 bull market. So meanwhile, months of inventory has crashed. Months of inventory for sale down to just 1.4. This is the lowest it's been since June 2017. Eventually, rising mortgage rates will slow the demand and inventory levels will rise, and we'll see this kind of slow down here. But we aren't there yet. So that's my report for you this month. It's Josh Kepke with McDonald Realty, and feel free to shoot me a DM, comment on this video. I'd love to get the conversation going. Don't forget to subscribe if you want to see more market update videos, pro tips. We do have a new season of Full Disclosure coming out very shortly. Not a new season rather, but more episodes. We've been a little behind the curve on that lately. And of course, some great housing tours. So don't forget to subscribe.